Hello, and welcome to myfinanceteacher.org. Let's have a look at a couple of interesting gold miners over here. Recently, these two were mentioned in the comments to one of my videos, so let's just have a look what's happening here. These two miners are the Eldorado Gold and iamgold. As usual, in my model, I look at the following factors. Clearly, the precious metals prices, gold and silver prices, the amount of reserves and resources that the miner has, the costs of extracting those resources out of the ground, all-in sustaining costs, long-term debts, taxes, in which case I just simplify things and apply the flat tax of 20% to all of the miners, at least for now. We look at the shares outstanding, we do look at the time value of money, and I throw in a bit of a secret sauce on insider shares, as larger amount of insider shares aligns the goals of the top management well with the rest of the company. And if insiders knowing more about the company are strong hands, that is a positive sign going into the future. Talking about the gold and silver prices, as usual, I'm going to have three scenarios: conservative price at $1,600, balanced price at $1,800, and an optimistic price at $2,000 per ounce for gold. For silver, I'm going to use $22, $26, and $30 per ounce, respectively. And while 2000 is our optimistic scenario, I think a truly optimistic outcome for gold price, perhaps over the next couple of years, is closer to $3,000 rather than $2,000 per ounce. Because looking at any kind of fundamental valuation, it's more likely to work out in the longer term rather than during a week-to-week or even month-to-month fluctuation. Next, let's have a look at the resources. Eldorado has proven and probable reserves of gold of around 17.4 million ounces and measured and indicated resources of gold of 8.3 million ounces. In addition, the company also have inferred resources, which don't go into the valuation, making valuation that much more conservative. Eldorado has proven and probable reserves of silver of 62 million ounces and measured and indicated reserves of silver of 34.7 million ounces, plus some inferred resources again. In my valuation, the proven and probable reserves, as reported last time several quarters ago, were reduced by the production in the subsequent quarters so far. Moving on to IAG, they have 13.6 million ounces of proven and probable reserves of gold and 23.9 million ounces of measured and indicated resources of gold. And of course, some inferred resources as well. Moving on to all-in sustaining costs, long-term debts and taxes, Eldorado guidelines for 2021 shows all-in sustaining costs of $10,035 per ounce. The company has nearly $373 million in long-term debts, and as I mentioned, I'm just going to assume the same tax rate of 20%. All-in sustaining costs for iamgold unfortunately have increased recently, all the way up to $1,415 per ounce. That's the midpoint of their new guidelines for 2021 with increased all-in sustaining costs. The company has $493 million in long-term debts and again a tax rate of 20%. Moving on to the time value of money, I'm going to apply a discount rate of 5% to the mine life. In case of looking at only proven and probable reserves, the mine life for Eldorado is 39 years. And if I add only half of measured and indicated resources, again making this model that much more conservative because we discount the measured and indicated resources by 50%, that brings this average mine life to 48 years based on ongoing annual production. For IAG, the average mine life of proven and probable reserves is 23 years, and if we add half of measured and indicated resources, that average mine life increases to 44 years. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. And before we jump into the actual valuation, perhaps the most interesting point of this presentation, let's have a look at some highlights that don't enter into the model but might perhaps influence your opinion on these miners. Firstly, for Eldorado, the all-in sustaining costs are attractively low at just over $1,000. Additionally, Eldorado also has reserves of copper, lead, and zinc, which didn't enter into the valuation either, so that again means that perhaps you could bump up the valuation just a tiny bit higher. Besides the existing reserves, there is also some additional exploration potential, and there is a comfortable cash balance of over $400 million in Eldorado. In case of IAMgold, unfortunately, the guidelines for all-in sustaining costs, as I mentioned, have increased substantially, but there are still some positive points. There is exploration potential which might add to the existing resources in the future, and the company has a large amount of cash balance at over $800 million. And now let's jump into our valuations, starting with the conservative valuation, where again we plug in the gold price of only $1,600 and silver price of only $22, and we only value the proven and probable reserves of gold and silver without even looking at measured and indicated, never mind inferred resources. All of that will imply a valuation of nearly $19 for Eldorado, which is over 100% undervaluation versus the current market price of under $9. And for IAMgold, all of that implies a valuation of around $2. And the company seems to be overvalued already on the market at the market price of $2.50. This overvaluation is 20% versus the market price. Moving on to the balanced valuation, where we plug in the gold price of $1,800 per ounce and $26 per ounce for silver, but we still look at only proven and probable reserves in the ground, that gives you around $25.9 for Eldorado, which is over 192% undervaluation versus the market price of under $9. And for IAMgold, the valuation is much better than the conservative valuation at over $4.6, which is an undervaluation of 86% versus the ongoing market price of $2.50. The reasons for these large fluctuations in the valuation of IAG is very high all-in sustaining costs, which basically increases the leverage of investing into IAG versus the gold price. Look at it this way. If gold price is around $1,600, the profit margin for IAMgold is under $200. Whereas if gold price rises to $1,800, the profit margin for IAMgold, the difference between the gold price and all-in sustaining costs, would more than double to just under $400. Whereas if you look at this same profit margin for Eldorado, that doesn't actually double with an increase in gold price from $1,600 to $1,800. At $1,600, the profit margin for Eldorado is just under $600, whereas at $1,800, this profit margin is only 50% higher at just under $800. And lastly, let's have a look at the optimistic valuation, where we plug in the gold price of $2,000 per ounce and a silver price of $30 per ounce. And here we look at all of the proven and probable reserves plus only half of measured and indicated resources, never mind any inferred resources. So even the optimistic valuation is not overly optimistic in my opinion. All of this gives us a valuation of around $35 for Eldorado, which is nearly 300% higher than the ongoing market price. And the valuation for IAMgold is over $9.8, which is also around 300% higher versus the ongoing market price. So as you see, due to the higher leverage, IAG catches up with Eldorado in undervaluation if you plug in substantially higher gold price. But at current prices so far, perhaps Eldorado is more attractive, especially if you are concerned with potentially lower gold prices for a while. And before we end the video, let me remind you to hit that like button, subscribe to the channel. I will keep updating you regularly on valuation of some of the interesting miners. So having a look at these two, let me know which one would you prefer here, Eldorado or IAMgold, or perhaps neither of them. Let me know what you think in the comments below. I wish you a productive Monday and Good luck in your trades.